Welcome guys. In this video I'm going to show you the exact same thing to how to just frame the narrative and then the bias. Yeah, we got the power of 3 right, open, low, high, close. Basically every ICT traders know this. If you don't know this, I highly recommend you to watch the basic stuff of ICT. So let's get into the video. We got the open, low, high, close right in this candle. We should be anticipating the next weekly candle or next daily candle. This is the key here. So next, basics of AMD, accumulation, manipulation, distribution. Everyone knows this, of course. Hack number 1, economic calendar. You should be framing the setup with the economic calendar. Without the red folder, there will be no volatility injection. So just trade the internal to external, pair it up with the economic calendar. It will be fine. Hack number 2, of course, the internal to external. We got the internal range liquidity and we got the external range liquidity. So you just need to combine the economic calendar with it. We got the internal range liquidity tag here, and we got the sell stop have been taken out and then it closed above, right? So we got the next weekly candle as a classic buy candle, open, low, high, and then a close. You should be anticipating the classic buy candle here. That's all. We got the external range, accumulation, manipulation, distribution, higher. Hack number 3 is the weekly profiles. So what are the weekly profiles we have? Tuesday higher low of the week, Wednesday higher low of the week. This is the Wednesday midweek reversal. 70% of the time, weekly higher low will be at Monday to Wednesday. Here's a mistake, it's a Wednesday. Our only work is to blend this with the economic calendar and the IRL or ERL. So this is the key. Classic Tuesday higher low of the week, Wednesday midweek reversal, Thursday consolidation reversal. The main focus will be the Tuesday higher low of the week and the Wednesday midweek reversal. This is the key here. Hack number 4, positioning on the right day. So you got the Tuesday's reversal right, and we got the Wednesday's continuation, and we got the Wednesday's reversal right, we got the Thursday's continuation. You should be focusing on the next day after the anticipated high time from key level is hit. That's the key here. So we got the NASDAQ example here. We got the weekly internal range liquidity tag, and then we closed above the range, and we got the weekly order block also. We got the next weekly candle as an open, low, high, and then a close. We should anticipate it. We got the economic calendar. No news on Monday, no news on Tuesday. Wednesday FOMC. This will be the post place, a PM session play. We got the CPI at the Thursday. This is also the post-CPI play, which will be the very high probability setups will be formed at the post red folder. And we got no news on Friday, which will be the skip for USD pass, of course. So at the daily chart, NASDAQ, we got the SMT at the lows, and the Tuesday's candle took the Monday's low and created the Tuesday low of the week. Remember the classic buy candle, open, low, high, and then a close, right? So we should be focusing on the Wednesday because we got the red folder at the Wednesday PM session, 2 p.m. We got the nice open, low, high, and close. Here we got the H1 annotations, right? Accumulation, manipulation. This is the Monday's price action, Tuesday and Wednesday. So just see how the price behaved or just printed here because of the red folder. We got no news on Monday. The price is so clumsy. And then we got no news on Tuesday. We got nothing in Tuesday also. We have nothing to trade here, right? And we got the Wednesday news here. It just accumulated, manipulated, and distributed. This is your main focus. You should be focusing on the right day. Here's the price action post FOMC. We got the H1 internal range liquidity as well as the M15 double purge, SMT with the YM. We got the order block which is created after the double purge, true period after the double purge. So we got the 2 p.m. open, low, high, and then a close, which will be the 4-hour new H4 candle, open, low, high, close. We got the M1, MMBM. This is the AM session highs. This is a lunch lows. So it just purged the low. We got the buy side of the curve. We got the intermediate term low. And this is the short term low to the right of it. And I took the trade here at the inversion FEG. And I put the stop loss below the SMT. So it just took the highs. That's all. You should need to be focusing on the right day. That's the key here. So this is a post-CPI play. We got the H1 internal range liquidity and we got the SMT with the YM, and we got the previous day high is equal to buy stops, which will be the Wednesday's high, and we got the engineered liquidity, which is the CPI high and then the CPI low. It just accumulated, manipulated, and then distributed. So 9:30 key time here, it took the low of the CPI data low, and we got the M5 chart. Remember the time frame alignment, H1 into the M5. We got the M5 out of block. This is the 9:30, and we got the very clumsy price action, which will be the 1 minute, what is that? It will be the most consolidation on the 1 minute. It's okay, but we still have the M5. So it just distributed higher. That's all you need, man. USD JPY example. We got the bullish DXY and then a bearish Japanese yen futures. So Monday just opened up and then created a low of the week at the Tuesday, taking out the Monday's low and closed above. So this is the daily candle we should be anticipating. Open low, high, and then a close. Open low printed and then the high to the external range liquidity. We got a nice classic buy day example. Open low, high, and then a close. So I just took a trade here, which is a silver bullet, right? Short-term low, intermediate-term low, anticipated short-term low to the right of it. This is a distribution stage at the silver bullet. I just took the trade and put the stop below and then targeted 2 hour. That's all. That's all you need. And then it just go into the external range with the original consolidation right here. So now I'm going to show you the week of October 14th one shot until trades, which you should need to be focusing on for the swing traders as well as the intraday traders. I'm going to just frame the weekly narrative into the daily narrative, everything. I'm just going to combine everything. So week of October 14th, we got no news on Monday, which will be the skip for me. So the CAT CPI Tuesday will be the play here, post-CPI. We just need to focus on the CAT futures in this piece of price action. I won't be focusing on the USD pass because we got no USD red folders. But we got the one asset, which is the gold, XAUSD. Most of the people got into the gold trade. So the first asset is the gold I'll be analyzing. The reason why the gold is, we got the weekly internal range liquidity to the external range liquidity, and we just closed above. Just remember the PDF, the slides, right? The textbook model here. The weekly open, low, high, and then close. What you should need to focus on? You just need to focus on the daily internal range created here, and SMT at the lows with the silver, and sell stops purge in the 4 hour with the buy stops. Buy stop first and sell stop second. So we got the nice one shot on trade at Tuesday. I called this live in my friend's Discord group. We just longed this gold trade area, and it just gone to the external range. For the intraday players, you just need to focus on the right time on the PDRA. We got the candle closure at Tuesday, closing above the range right here, and we got the open low high close off on Wednesday. What do you need to be focusing on? You just need to focus on the H1 internal range liquidity, which is here, and then you need to focus on the M5 structures with time. That's all. So SMT is created at the lows. This is a key time, which is 8 p.m. to 10 p.m. and we got the double purge also, buy stops of the range and then sell stops of the range. As you can see, the price just single candle purge, whatever. But we got the closures here, right? And we got the PDRAs, which is an M15 FEG also here. And we got the breaker, which will be the highest probability entry here, and it just ran the highs. That's all you need for the intraday. And the two more one shot on the trades I called live here is the one is a GBP USD. We had the GBP news at the Wednesday CPI, so I should be focusing on the GBP futures, and I found that GBP futures is just melting down, which is going to be melting down, of course. So we got the sell stops purge here. We got the previous month low. Here. We got the previous month low right here. We got the previous weekly low here. The sell stops have been purged, and the buy stops. So it's most likely to be the distribution of the CPI, right? I just called it that the live stream because we just opened up and then created high in the daily order block. We have the previous week low as well as the previous month low. I gone to the 1 hour chart. I just looked at the chart. So we just purged the sell stops and then the buy stops. We got nothing above here. As you can see, just swept all of the liquidity, just the trend line, whatever you call it. So we got the intermediate term high here, and the CPI next day, I just gave the one shot until trade here at this order block. So it played out perfectly, taking out the previous week low as well as the previous month low. This is how you should be focusing on the one shot until trades as well as the intraday trades. This is the only way to trade the proper narrative and the bias.